How do I use my 401k or IRA to invest in real estate?
You buy real estate with the money in your 401k or IRA.
But TD Ameritrade will not let me buy any real estate in my IRA.
And that's a really good point. You need, if it's an IRA, you need a self-directed IRA where you're pretty much the custodian.
Yeah.
And
well, you have a custodian, but you're directing the custodian.
Correct.
401k, you can be your own trustee. You don't need a custodian. Tell them to fly away.
Now, a couple points. The IRA can absolutely not have any loans to the IRA. So you can't get a mortgage on a property that you're buying in your IRA.
You can. But then it's subject to.
Oh, then it's subject to which one? It's not the
UDFI.
UDFI. Thank you.
Yeah, no, I have to deal with this all the time. So I'm always like, stop that. If you have a loan and you make money in the IRA, it is subject to unrelated debt finance income. If you do the exact same thing in a 401k, you are not subject to tax in the 401k. So our recommendation is if you are leveraging your real estate, and it has to be non-recourse. You cannot sign on that loan individually, or your whole IRA just got disqualified and you have a taxable event plus penalty.
Which brings up another topic for both of these, the 401k and the IRA. What you like to talk about often is you can't pick up a hammer.
You cannot do any work. You cannot use your personal services to improve the value of that asset. You can run the IRA. You could tell other people to do it. So like if I have an IRA, first off, do not own the real estate directly in an IRA, because you are personally responsible for any liability. So somebody falls over a rake and busts their head, they're suing the IRA and you. So we need an LLC in there. So your IRA, self-directed IRA, and we know some great IRA Club, Dennis Glitz, great guy. You set up an IRA, roll it over, and you put a LLC together that is owned by the IRA, easy peasy. Put that piece of real estate in there. Great investment. A lot of people are doing it and they make a good return, right? That's what you do. If you have a loan in it, make sure you're using a 401k. If you are doing a syndication, they all use leverage. That's a loan. That makes the income that your IRA makes taxable to the extent that there's leverage. So if it's leveraged 75%, 75% of the income is taxable. They don't let you use leverage and not pay tax inside of an IRA. So if that's you, we would just roll the IRA into a 401k. And if I just freaked you out and you're going, oh crap, I bought a syndication, say you're a doctor and you got your big old IRA and you did a syndication in that IRA, we need to get it out. We need to move that, roll those funds into a 401k. We need to move the investment, name only, into a 401k so you do not get hit with the UDFI.
Another mistake I sometimes see, not that often, but I have $500,000 in my IRA. I go out and buy a $495,000 house.
Don't do that.
Because I can't pay any things that the house needs. The IRA needs to pay for taxes. There's not going to be interest, but repairs, maintenance, all this stuff. And if it doesn't have any cash to pay for it, gosh, I'd hate to lose that house to the sheriff.
Yeah, you're toast, unless you can get a line of credit or something like that again. But then if you're an IRA, you're going to have tax issues. 401k, you can do it all. It's easy. Anderson's 401k, by the way. You can do whatever you want. You can invest. There's certain things that are taxed. You can't do like collector coins and things like that. Like go out and buy a bunch of artwork and put it on your wall. You can't do that. Right. But you can go, technically, you could go buy gold. You could buy real estate. You could buy syndications. You can go and you could trade in it. You could do whatever you want. You're the direct. You don't need a custodian if it's an Anderson 401k. If it's a self-directed IRA, then you're doing everything through the custodian. Custodian signs all the paperwork. You just pay. I know they kind of nickel and dime you a little bit, and weekends are probably off. But you could still use it. So like if you're working with some of our partners, Alpine, for example, and you buy single family homes, they probably 70% of the houses that they sell are sold into retirement plans. They're almost always sold cash. These are $120,000 homes. and they're nice little cash flow machines. They're usually in the Midwest, sometimes Idaho, but for the most part, it's North Carolina, it's Missouri, it's Indianapolis, it's Indiana, sometimes Ohio. But there's good little cash flow machines, cha-ching, 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 and you could do it directly in your IRA especially if you're working with the party that's not trying to push it down your throat. But if you need to be fast and you're buying, for example, foreclosure properties, you're buying them at auction, or you're wheeling and dealing on a weekend, you probably need that 401k so you can sign as the custodian, as the trustee under a 401k. Works great.
And generally, you don't want to be flipping in your retirement account.
Don't be flipping in your retirement account.
Because that generates UBIT.
Unrelated business income tax, yes. And Jeff is exactly right. You cannot run an active business in your retirement account. We
don't invest in Toby's Pizza Shop either.
Don't do much. But if you do flips they say it's about 5. Most custodians would say, cannot do it consistently, cannot become a business. If you do 1, nobody's going to get mad. Do 2, you're getting the stink eye. 3, you're like, you're in that gray area. 4, now it's turning into red. 5, you're toast, right? Just don't do it. If you wanted to do that, you could partner. There's something called a Rob's transaction, which is rollover as a business startup. And it's a fancy way of saying, I set up a corporation that's the IRA is an owner in, or the 401k is an owner in, and then we go flip. That's what you could do. What's the self-directed 401k for? There isn't such thing as a self-directed 401k. They use that because it sounds similar, like, hey, we'll set up a self-directed 401k, a custodian sneaking in their service when they do it. They're like, hey, we'll set up a self-directed 401k. It's a fancy way. Like, really what a 401k is you could just be your own trustee. Like, there's nothing that says self-directed. Self-directed IRA is a fancy way of saying, I'm going to direct the investments and tell the custodian what to buy, and they're willing to buy different types of assets. When I go to TD Ameritrade, for example, they're not going to let me buy real estate. They're going to say, you can buy things that are on our platform, and that's it. Hope that makes sense, Larry and Pam. Anything else?
Nope.
Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week, we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.